Hey expats and travelers alike, I'm Josh with Expats Everywhere, and today I go to Lisbon to talk to Fresh Portugal, a specialty tax firm. I'm going to ask them your questions that you sent in on Patreon and YouTube. Let's go.
I'm going to give you a simple answer. So you become a Portuguese tax resident when your address linked to your NIF has a Portuguese address, not an address from abroad, outside from Portugal. So, for example, to buy a property in Portugal, it's mandatory to have a NIF. However, you can have a NIF linked to our international address. So, if you are American, you can have your NIF with a US address. So, you can buy property here in Portugal. You can recommend you to choose not as your first residency property. So, you can have this property, you can live here in Portugal in this property, but you're only going to be a Portuguese tax resident when you go to the tax authority and change your American address to the Portuguese one, if you want to become a Portuguese tax authority. However, the tax authority can deem you a Portuguese tax resident if you spend more than 183 days within a year in Portugal, okay? Or if the tax authority sees you have the intention to live in Portugal. So it's like they have to prove it. But if you have intention, for example, if you're a couple, have kids in school enrolled, if you have 1 year subscription in a gym, you are a tax resident in Portugal if you do not have any kind of social life related in another country. So it's tricky, but if you want a straightforward answer, look at your NIF. If you have a NIF with a Portuguese address, you are a Portuguese tax resident. To you to be considered a Portuguese tax resident, you have in the Portuguese legislation 2 criteria. The first one, if you spend more than 183 days within the same year in the country, or if you have the intention to live in Portugal as your home country, okay? However, if you have a NIF, a Portuguese tax number, and your address in your NIF is linked to a Portuguese address, you are already a Portuguese tax resident, okay? You are allowed to have a NIF with your American or international address because you can buy a property with a NIF, you can have a bank account in Portugal with this NIF, but if you really want to live here and be a tax resident, you have to change your international address to a Portuguese address, okay? However, if you keep in Portugal for more than 103 days per year, with an international address in your NIF, you can be considered tax resident in Portugal because you are with the first criteria of the tax law. So if you live here less than 103 days per year, you can still be considered a tax resident in Portugal if you are showing the intention to make Portugal as your home. For example, if you have a long-term lease agreement, if you have your kids enrolled in a Portuguese school, or if you have like a gym subscription for an entire year. So it can deem you, the tax authority can deem you as a tax resident in Portugal.
Okay.
First of all, if you are in Portugal and you are providing a service, a work from Portugal, it's considered a Portuguese sourced income. So you have to declare and pay Portuguese taxation on this on such income. So if you came to Portugal with a formal dependent employment agreement and you decided to switch for a freelancer activity, you have to be aware because you need to open a formal freelancer activity under the tax authority portal. So you have to open activity, choose your activity code, and then you must invoice from the Portuguese tax authority system. So there's a lot of mandatory things that you have to comply with the Portuguese tax rules, not to face any fines, and you have to pay attention to the code you choose because it's going to impact your taxation, and also if you have any kind of tax benefit like the NHR, for example. So Thomas, first of all, you need to open a formal freelancer activity under the tax authority portal and then invoice from the tax authority system that's called Recibos Verdes, green receipts here in Portugal. So you have to first of all choose your activity code. What kind of service you provide? For example, if you are a developer, you're going to choose the code and starting to render your service. So when you invoice your client, you have to be attention that if it's outside Portugal, outside European Union, probably you're not going to pay VAT, for example, but you have to pay Social Security. For your first year, if you start, for example, 2023, your freelance activity, you're not going to pay Social Security because we have exemption. However, you have to file your tax return and inform your income. And to personal tax income, to the Portuguese tax authority, Thomas, you're going to pay taxes to the Portuguese tax authority because it's where you provide your work. Okay, so it's up to you to declare and pay your taxes. If you provide a freelancer activity as a developer, for example, and you invoice your client during the entire year 100K, so we have 75% of this income is going to be your taxable income. However, during your first year, you have a 50% discount. So only half of the 75K is going to be taxable. Okay. If you have the NHR, you're going to pay a flat tax rate of 20% because the developer is a high value activity. If it's not, you cannot apply the NHR. So you have to apply the regular and progressive Portuguese tax rates that can go from 14.5% to 48%. So you have to see where your taxable income is and apply the progressive tax rates. So if you have the NHR and provide an activity like, for example, a lawyer, it's not a high value activity. So you're going to apply the regular progressive Portuguese tax rates. So first of all, you have to identify if your kind of activity, if it's a high value activity or not. So if you're dealing with the double tax treaty between Portugal and the US, you have to consider that you are rendering the service from Portugal. So it's a Portuguese source income. So you have to pay tax to Portugal. Okay, so during the NHR, you're going to pay, generally speaking, a 10% personal income tax rate. After the NHR, you're going to pay the Portuguese taxation over your pension. So you're going to pay as a Portuguese regular resident without the NHR that can go from 14.5% to 48%. So you're going to add this to your income and pay the regular Portuguese taxes. If you pay taxes in the US, since you have the double tax treaty, Portugal is going to have to give you this credit of your tax that you pay in the US, and you're going to deduct from the Portuguese taxation.
So the answer is, like a lot of these things, it depends. There is a double taxation treaty between the US and Portugal, and its goal is both to make sure that you don't pay taxes twice on the same thing, and also to make sure that you do pay tax somewhere. There is a lot of nuance to that. It's particularly unique for American citizens. Unlike the rest of the world, America taxes its citizens wherever they go on all of their income. Most countries only want to tax you when you're physically present there. So obviously, we can't get into every detail of a fairly complex treaty, but the basic idea is that you should not pay tax twice on the same thing. And then the treaty sets out who gets to collect your tax on that and how credits and exclusions are used to offset that on the side where you're ultimately not going to pay the taxes. So to make a long story very short, hopefully with some nuance, you won't pay tax twice on the same item of income. The FBAR is a form that we won't get into the specific thresholds, but essentially if you have over a certain amount in a foreign bank account at any point during the year, you've got to file this form. For the most part, whoever does your taxes does that. We can do that for you. The form technically is actually filed with FinCEN, the Financial Crimes Enforcement Network, not the IRS, but typically it's filed by whoever does your taxes and will be filed at the same time. It has the same deadline. It doesn't have any tax consequences, though. It's just a report to the government saying, here are the accounts I have overseas. Something to keep in mind, in most cases, the bank is already telling America about that. So if you ever read online, oh, I'm not sure you really need to do this, yes, you really do. It really is important, and there are real penalties for not doing it. But it is not about tax, it's about reporting, so it doesn't itself trigger any tax. as far as business goes, where you're operating these days is even such a fluid concept to say where is the business, shutting it down in Portugal or in the US and moving it. A business really isn't even a place, it's a concept. And so I would say this: the risk of being taxed twice or triggering a much higher tax than you meant to, or having all sorts of strange consequences with your business, it's too complex to answer without getting into specifics. And really, really, please contact an accountant, a lawyer, both, if not us, someone. But if you are going to be operating a business with a connection to more than one country, then I would strongly urge you to seek professional advice. That could be a wonderful thing in your life, or it could very, very quickly become a really terrible thing for you. So don't try to do that without some kind of professional advice, is what I would say.
Basically, there are two ways that you could classify any kind of passive income in Portugal. It will either be capital income, which might not be a usual language in the US, but it refers to any kind of income that you have that is essentially connected to an investment of capital that is being paid to you. Okay, a return of a certain investment, which is different from the capital gains, which are any kind of income incurred due to the sale of a certain asset that you have. It could be real estate property, it could be stocks, it could be cryptocurrency, could generate capital gains in this specific case. But the capital income, which we are talking about the dividends, we are talking about the interest, it will, under the NHR, be exempt due to the fact that it must be exposed to taxation in the country where this investment it is, and normally it is. It depends on the way that the tax rate analyzes it and classifies this, and the tax rate between US and Portugal allows the US to tax that, even because of this the saving clause, which will tax you for your citizenship either way. So you will be exposed to taxation in the US, therefore you can claim an exemption in Portugal. Without the NHR, flat rate of 28%, or you can choose to aggregate this income into your total burden and put them in the progressive scale. But the progressive scale goes from 14.5 to 48%. It will have some adjustments for 2023. It has been published in the government budget recently, but it will be something beyond in the middle of these rates, which means that it could be worth it or not. It depends on how much you're making with this passive income. If we are talking about capital gains, okay, which will not fall into the same category of dividends and interest, which means that you have a certain investment that it is in the market, and then you have stocks, you sell them, you have the difference between the price that you're selling and the price that you have bought. This specific gain, if it is derived from securities like stocks and any other kind of security that you have invested, it will be taxed either way due to the fact that the country that has the first right of taxation, it is your tax residency. So you will be taxed in this case at a 28% flat rate, and you can also choose to aggregate that, but you need to be careful. You need basically a simulation of what it would look like in your rates and what would be the most efficient way of classifying this in considering your global income. And as I said, it works like that even with the NHR. With the NHR, you have basically a possibility of disputing this assessment from the tax authorities, because we have an arbitration decision that allowed a US citizen to claim an exemption on capital gains derived from securities due to the fact that they are exposed to taxation due to the US citizenship and the saving clause. So there is a possibility in case you have a huge bill of taxes referring to capital gains deriving from the sale of stocks, you can still dispute that. If we are talking about capital gains derived from real estate property, you're gonna have a sale of a real estate property in the US, you're gonna have gains with that, you need to report them in Portugal. However, it is in the tax treaty that capital gains derived from real estate property can be taxed in the source country, in the country where the property is located, which means you can claim an exemption under the NHR. Without the NHR, you will be taxed at 28%, with obviously the possibility of claiming credits for the taxes that you have paid in the US. So Roth IRAs are a typical investment in the US. It's such a figure that doesn't correspond to anything quite similar in Portugal, although the tax legislation provides us some guidance regarding similar scenarios. And it quite falls into the same category of a pension, which means it's an income that it is available to you in retirement, which means that you can access it without any kind of penalties after your retirement. In this case, we classify this as pensions, okay, in Portugal, although it's tax-free in the US. It's tax-free in the US due to the domestic law of the US. In Portugal, in the moment that you report that, it will fall into the categories and the legislation of Portugal, which means it will be taxed as pension. With the NHR, we are talking about a flat rate of 10%. Without the NHR, again, progressive scale. Of course, it depends on how much you're making with this Roth IRAs, and you will be taxed for that, and it's worth to mention, with the withdrawals, okay, which means you are literally withdrawing to your personal account any kind of result of this investment, and the aftermath of that will be taxed in Portugal. If you keep it in there just growing, it will not be taxed, but if you have the NHR, maybe it's worth it to draw it before the NHR ends. So in Portugal, if you are classifying something as an annuity, the classification of it, it's pretty straightforward and falls into the same class of the pensions. So under the NHR, it will be at 10%. Without the NHR, the progressive scale. The rules for the US will not be applied directly in Portugal. And in Portugal, they will respect basically your self-assessment and the way that you are describing it. If it is annuity, it will fall into the category of the pension and tax it as so. Salary, let's say we are talking about pure Social Security and not a supplementary Social Security. So you get your salary, a part of it will go to the fund of the Social Security, it will stay there, and then you get a payment from the Social Security.
Yes.
This payment from Social Security will be taxed in Portugal. Basically, capital gains derived from the US, it really depends on the source of it. If it is derived from real estate property or if it is derived from securities, if you're selling stock, for example. If you have capital gains derived from securities, the NHR will not grant you a benefit in the first place, but you might be able to dispute this due to an arbitration precedent that we have, or where a US citizen was actually able to claim an exemption on that, despite the position of the tax authorities. If it is real estate property, yes, the NHR will grant you a benefit, and it will be a full exemption in Portugal due to the fact that it's being taxed also in the US. If you have rental from Portugal, then the NHR won't help you, because rental will only be exempt in Portugal if it is foreign sourced and exposed to taxation in another jurisdiction. If it is rental income from Portugal, the NHR will not make a difference. There are some tax breaks for rental depending of the timing of the contract, if it is a long-term contract, for example, but the NHR will not grant benefits in this case. Yes, in this very specific scenario, we would need to understand a little bit more how this business is structured in order to understand how to classify it in Portugal, because it could vary. That's why it's relevant to have a tax framework for yourself, so you don't try to get a generic advice. You really need to focus on what it is your current structure and the way to classify it. But if we are talking about an active income, in this case for the business, you will be taxed in Portugal, yes, and the NHR most likely won't help you. But if it is foreign sourced, it could have an exemption in Portugal. It really depends. But the Social Security will be taxed in Portugal without the NHR, certainly, and it will go to the progressive scale. And if you just want to, if it is a possibility to aggregate it all with your business, we can probably foresee a very high rate for taxation. So if you are working from Portugal, physically from Portugal, you're sitting in a chair in front of your computer here in Portugal during most part of the year, and you are a tax resident in Portugal, it means that this income is sourced in Portugal. It's not only about the domestic law of Portugal. That's the way that the tax treaty is designed to be. It might sound weird, but the tax treaty is not prepared for a reality where you have employees working full-time and being tax residents in another jurisdiction. In this scenario, the tax treaty allocates the source of the income to the tax residency, which means that if you are a tax resident, you're working from Portugal, you must be actually hired in Portugal in order to have a full compliance. If you are not hired here, the only way to report this is as foreign earned employment income in the Portuguese tax returns, which means it creates a margin for you to claim an exemption, but that's inaccurate because you are working from here, the income is sourced here, you must be hired here in order to have a correct report, but not only that, but to comply with all the regulations. Okay, so even if you are withholding tax in the US, even if you have a W-2, even if everything is fine with the US side, in Portugal it will not be, because although the tax authorities could not realize that you are in such a position in your tax returns, it will be quite clear what you are doing. You are with a foreign contract, reporting this income as foreign sourced, and as I said, it's inaccurate from a legal perspective. As for the foreign earned income exclusion in the US, the fact that you are in Portugal allows you to claim that. If you are paying or not taxes in Portugal, it's something that the IRS in the first place will not be aware, and eventually it could lead to some problems with the IRS, but in the first place, yes, you can claim the foreign earned income exclusion. If you are correctly hired in Portugal and you are collecting your taxes in Portugal, it's perfectly possible to use the foreign earned income exclusion. It's correct to use it, so you relieve your taxation in the US. But if you're not hired in Portugal, you're only hired in the US, you can use the FEIE, but it could look weird to the IRS. So if we are talking about a scenario with the NHR, well, if you have any kind of ROTH IRA and part of it, it refers to your contributions and you have a growth on it. If you take the growth while you are in the NHR period of the 10 years, it's a good idea because you will be taxed solely at 10%. And after this period, if everything that you have is your own contributions, they are just a return of capital. They will not be considered income in Portugal, which means you can escape the taxation after that and just focus on the period of the NHR to be fully taxed in this period, since it will be a rate of only 10%. So considering a scenario without the NHR, then it's more problematic because regardless of when you do it, you will be fully taxed on the progressive scale, again, for the growth of it. Since there is a provision in the Portuguese law that allows you to use this. The Portuguese legislation refers to supplementary schemes of Social Security, which, as I said before, ROTH IRAs doesn't quite exist in the Portuguese reality of the economy, so we must fill it in what it is more likely to be, and it's exactly this kind of scheme. And this kind of scheme in Portugal, you can separate what it is your contribution and what it is the growth that refers to what's going to be taxed as pension. So yes, with the Roth IRA, it's a good idea after you are in Portugal with the NHR to use this structure. Without it, doesn't make a lot of sense. As for the matters of preparing to come to Portugal and try to do something as a planning with this kind of retirement accounts, I don't really think there is nothing that special that could be referred here, especially because if you try to move these accounts and incurring gains, maybe you will have penalties before the due time to access it. So considering the 10% rate, it is a good deal. So there is no difference between the taxation of a non-EU citizen with a residence permit and a EU citizen. There is even a prohibition for you to tax differently people with different citizenship. What differentiates people, it's residency or non-residency in a certain jurisdiction. If you are even a Portuguese, or if you are a European Union citizen, or if you are a non-EU citizen with a residence permit, what will make a difference here, it's the NHR. Remembering, NHR is available for anyone. It's not only for non-EU citizens. So the stages of the Golden Visa doesn't refer directly to when you need to start paying taxes. What refers to that, it's the fact that you have registered yourself personally as a tax resident in Portugal. And after you have the residence permit that the Golden Visa allows you to have, you can come to Portugal, you can register yourself, and then you will become tax liable here in Portugal. It's not about the stage in which you surprisingly becomes tax resident in Portugal. It's the moment that the residence permit it is available to you, and then you choose to change the address. Of course, after you have the residence permit, you need to change your address because then you are officially, legally living in Portugal in theory. So you need to be here, you need to change your address, and then you become liable for taxes in Portugal from that moment on. Fair price really depends on what kind of advice you're looking for and if it is a specialized one or not. So in Portugal, you will find tons of professionals who work with local issues. Maybe they're not prepared to deal with issues that are more complex, that involves more than one jurisdiction. So it really depends on the problem that you have and what kind of circumstances are around you, but do not expect that a local professional not use it to this kind of circumstances will be specially prepared to deal with that. It's not that they're not good, it's the fact that they are not used to deal with that. And people who are used to deal with that, those who are specialized, of course, they will be more expensive. And it works like that in the whole economy. You can buy a cheap phone or you can buy an iPhone. It really depends on your need, it really depends on what you're looking for. Sometimes they're more expensive, but they bring some more benefits to you.
If you want to get the benefits of working with Fresh Portugal, we've put a link in the description section below, so check that out. And if you want to see more on US taxes specifically, you've got to watch this popular video right here. Now, let's get moving. Bye.